And welcome back to the Lance Roberts Show podcast. We're visiting with Peter Atwater today, the president of FinancialInsyghts.com. So, Peter, we left off talking a bit about the Federal Reserve and Jerome Powell, and a bit about this wealth transfer effect that's occurred between the bottom 80% of the population. They haven't been part and parcel of this recovery. The wealthy have prospered greatly from this, and that really brings up an interesting question here, because since the election in 2016, the markets have done very well. There's been this general premise that because Donald Trump was elected president, that everything in the world had all of a sudden changed. And we saw corporate confidence go up sharply. We saw investor and consumer confidence jump markedly. And, a lot of these, economic indicators that people have looked at recently, unemployment rates and unemployment claims, et cetera, were already well into the trend of going lower over the last several years. But yet we came along and passed corporate tax cuts. This was really to give a big boost to the markets and to corporate earnings. And we did see the reflection in corporate earnings by seeing a large, percentage gain in corporate earnings because of the reduction in taxes. But yet the markets really didn't participate like people thought. I mean, we're looking at a market that's essentially flat for the year as we speak right now, down just a little bit, but we've had record earnings. How did the markets not connect the two together?
Oh, the markets did connect the two together, but the markets did exactly what investors do, and that is they front run good news. And so the tax cut was priced in by the time it had been approved and signed by the president. And that is not uncommon, where you see investors fully valuing great news ahead. So that extrapolation was being priced in coming into 2018. The challenge for the administration in 2018, though, has been trying to balance the needs and wants of the financial elite with the chronic underconfidence that elected Donald Trump. Mm-hmm. And those two groups have two very different sets of preferences and needs. And to frame this, when we lack confidence, it's all about me here now. And to me, it's not surprising then that we've seen the president take a strategy for policy in things like border walls and tariffs, and trying to renegotiate existing treaties. There's very much a xenophobic mindset that goes along with low confidence that the president is pursuing in all aspects of foreign policy. Mm-hmm. That is the antithesis, though, of what us everywhere forever high confident investors are looking for. And so there's been this tension in the last 12 months between what the president is hoping to deliver to the investment community and what he's hoping to deliver to the Trump base.
And that's an interesting point that you bring up here. And talking about confidence, this has been one of the most, I think, divided couple of years that I've seen. I mean, there is such a strong pressure from the people that don't like Donald Trump, very much against it. Everything that you can read or feel or hear about it, you can feel this basic revolt against the administration. If you are for the president, then he can do no wrong, no matter what it is that is done. He can simply do no wrong. And when he engages into some policy like, say, tariffs, which have a long history of not being economically sound issues, people say, well, it's part of a bigger strategy, and they give him a lot of credit for this. Now, and the reason I ask you the question is not your position on whether he's doing a good job or not, but doesn't that psychological division between and such one that's so clearly visible in the country, does that not also impact the strength of economic growth going forward?
It does. I think that people are misguided when they are concerned about economic inequality. The much greater concern that I have is the confidence inequality that exists in America. There's an enormous confidence gap between owners of capital and employees of capital.
Right.
And so the president early on in his administration tried to placate both sides. And what you've seen in the last year is an inability to keep going back from one side to the other. He's being forced to choose. Which of these groups do you really support, because their preferences, their objectives are contradictory.
Right.
And that back and forthness creates uncertainty for both groups. So you have farmers in Iowa who are now worried about tariffs, where in the past they had been supportive of tariffs.
But doesn't that also come back to the fact, Peter, that we also see, that anxiety that's kind of going through the markets and the economy and as a whole, and showing that and seeing that show up in, this raging kind of opioid epidemic that we have going on, throughout the country now?
Yeah, one of the most fascinating charts to me is Google Trend data for the word anxiety, or the phrase anxiety medication. From 2009 to earlier this month, it has been rising in a steady nature that is absolutely contradictory to what you would expect in an economic recovery. Typically, as markets get better, as job growth improves, the economy really takes off, you would see less anxiety. Mm-hmm. And that has not been the case at all. There is tension underneath the surface that is not getting pulled into and recorded by the economic statistics, like consumer confidence.
Yeah, and that's an interesting point that you bring up, Peter, because I know you look a lot at economic statistics and what's going on. And when I dig into things like, the unemployment rate or jobless claims, or interestingly enough, the job opening and labor turnover survey, when you start digging through this, then you read statistics that says, okay, well, everybody that's got a job that wants a job, right? You've got 3.7% unemployment, or whatever the number is. So obviously everybody's working that wants to work. But then you look at the other statistics, 94 million people sitting outside the labor force, 1 out of every 4 households on some form of government subsidy. There's a big disconnect, or at least seems to me to be a big disconnect, between what the official economic data is versus what's happening in the real economy. Do you see the same thing?
Yeah, I think that the data is completely missing the really extreme anxiety that exists below the surface. The opioid epidemic is an example of that. And in fact, I would suggest that YouTube, Netflix, Pornhub, all of this online video streaming that is just distracting and sort of placating has sort of filled a void, but we're exhausting it. We can't binge watch anymore on Netflix. And so I think we're reaching a point where anxiety is now turning into action. I think we are behind countries like France, where we're really seeing the consequences of chronic underconfidence and anxiety now manifest in social unrest. But that, I think of that as a harbinger of things to come if we don't start to address the anxiety on Main Street that people are ignoring today.
We're talking with Peter Atwater. He is the president of Financial Insyghts. And Peter, while I step out and check my social media and Pornhub account, we'll be right back. And I want to talk about this social unrest and really the social unrest as it relates to social media, because as you said, in France, Germany, every other country in the world, we're seeing this rise of unrest, this rise of a populist desire to see change by the people, but yet it seems like the elites don't really clue into the message that's being sent. I want to come back and get your thoughts on that and wrap up our interview with Peter Atwater. Be right back after the break. Don't go away.
Got a question for Lance later? Ask now at realinvestmentadvice.com.